Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Tuesday, June 4th, 2013. Well, a continuation of the trend to the upside today, and this market has been technically in an uptrend for quite some time, but what we're seeing here is the market is forming some sort of a congestion area, and we'll look at that in a minute. We're seeing a lot of indecisive trading. We're seeing a mixture of black and white-bodied candles day after day. That seems to be changing, and we're not really seeing either side taking strong control, and we're not seeing any follow-through or any substantial follow-through after we see one side take control of the market. So today here, once again, following the previous day's trading where we saw a fairly large white-bodied candle where the buyers closed with control of the market, we've seen them lose control. Here we have a candle, or in bar chart terms, a bar that's an inside day with a lower high but just a slightly higher low, so no change of trend to the downside. So technically the prior trend from some time ago is still to the upside. But the black body denotes somewhat of a change of momentum for today's trading in net terms. So the black body means that the sellers have made net bearish progress as opposed to the buyers for the previous day's trading, and certainly doesn't support the first time frame trend to the upside. Having said that, however, the sellers have failed to take control of the market. So for the previous day's trading where the buyers firmly had control, the market has closed around the midpoint level, and it means that neither side has taken control. The important thing here, however, is that the buyers have lost the control that they closed with yesterday, and that suggests that we're not going to see any follow through. Now if we look at this candle and the previous 4 consecutive candles, the market has interacted with the Kijun Sen around this 1411, 1412 area, and we have seen rejection from there. So that has held as very, very strong resistance for this market, and even at this point here it has held as resistance. So moving forward, that is going to be a very, very important area for this market. And by the same token, however, for the past 3 consecutive trading days, the Tenkan Sen has held as support. So we have a market that's congesting now in this very small time frame for the past consecutive 4 trading days, as well as the congestion that we saw prior to these 4 trading days. So a market that's really attempting to make its mind up. Now if we do see a breakout to the upside above this congestion, the market will interact with the bottom of the cloud, and that will provide fairly strong resistance for this market. So there won't be much mileage in us trading a breakout to the upside. But if we do see a breakout to the downside in line with the market being trading below the Kumo, we could see the market trading significantly lower. We do have very solid support down below where the market's trading, however, so at 1380.7, that has been a very important area in the past and in the recent past as well. So that has potential to act as strong support. And also the area extending down to around 1329, we've seen very strong rejection from there previously. So if the market does attempt to close down below the 1400 level and below 1380.7, that is a very solid barrier to the market trading lower. But to the upside, the area just above the Kijun Sen extending up to 1421 is solid resistance, and then around the 1432 and the cloud, which extends all the way up to around the 1478 level, will offer us very, very strong resistance to this market. Now in terms of the previous pattern that I highlighted, we saw this symmetrical triangle type pattern form. We saw the prior trend coming down here, and with all congestion areas and patterns we require a prior trend, and here we see the convergence of the peaks and troughs within the pattern. We saw confirmation of the pattern with this close up above the upper barrier, and it was a bullish close and did suggest the market may have found some solid momentum and had some good potential to reach its target, which was up around 1485 roughly, coinciding with the highs of this rectangle pattern. But we haven't seen any follow through. We've seen a lot of indecisive trading following that, and then this congestion, and it really does suggest that the buyers really aren't strong players in this market. The lack of follow through does suggest that the market may not meet the target from the breakout from that pattern, but we have the possibility of another pattern that's forming, and we'll look at that now. Now this pattern seems to be forming as something of a wedge type pattern, and similar to a triangle type pattern. They tend to be a little bit thinner, not as big, but this is quite a big one in relation to the previous downtrend that we saw the market in. But we see the convergence of the peaks and troughs within the pattern, and they tend to be at an angle, and generally when we see this type of pattern, when we have a downtrend and the wedge forms at an angle and some sort of a retracement of the prior trend, they tend to be continuation patterns. So there is a possibility that if we do see a close down below the bottom barrier, which at the moment is around the 1393 level, then we could see the market trading substantially lower and perhaps even down to around this 1300 level. They can be reversal patterns, so we will be on the lookout for a breakout up above the upper barrier, but the limiting factor here is that we have very strong resistance offered by the cloud, so it's not likely, and the market is trading below the cloud, so the overall bias is to the downside. So the greater probability would be that the breakout would be down below the lower barrier, and we could see follow through down to around the 1300 level. In terms of the Fibonacci extension, nothing new to report here. We have seen the market trading above the 161.8% level. The market is failing to test up to the 261.8% level. If we do see a breakout above that, will also offer itself as a barrier to this market, not only the area around the bottom of the cloud, but also 1429 at the 261.8% level. In terms of the Fibonacci retracement of that strong prior first time frame downtrend, we saw the market interacting with the 61.8% level. We saw a rejection from there, and the market has failed to test to there, so that level is still active around 1422. Will be a strong barrier, and all of this does suggest potential for a change of trend, and does suggest that there is a possibility of a breakout down below the lower barrier of that wedge type pattern. Now in terms of Ichimoku, obviously with the market trading down below the cloud, we have an overall negative bias in the long-term time frame, so that should govern how we perceive the market, and especially in terms of the pattern that had formed, that wedge type pattern, and suggested the breakout has a greater likelihood of being to the downside than to the upside. The market is also trading down below the Kijun-sen, so bearish in the medium-term time frame, and we have tested to there and been rejected from there. So nothing new there. The Kijun-sen at 1411, 1412 has potential to hold as a resistance once again, but the market is maintaining price action up above the Tenkan-sen, suggesting that we have a bullish market in the short-term time frame. And we have been trading above there for quite some time, for the past couple of weeks, and it has held as support. So what we're seeing here, as well as these congestion areas that are forming and the patterns that are forming, we're seeing a market that's bound by overhead resistance close by at the Kijun-sen, but also support forming just under where the market's trading at the moment. So a solid bearish close down below the support at the Kijun-sen, sorry, the Tenkan-sen, the green line around 1397, could see the market testing to 1380 and then perhaps even below, but also a breakout up above the Kijun-sen around 1412 could see the market testing higher towards the top of the cloud. We do need to be patient, wait for a breakout in either direction, but with the market trading below the cloud, as I've already mentioned, it's more likely we would see a breakout down to the downside, but we can't preempt the market. Let's wait for clear price action to develop.